Alrighty, guys. It is 3:30. Time to wrap it up for today. It is Thursday, February 6th. And that's scary, right? Go figure. 2 o'clock hour. Here it comes, right? Directional change, big scare, typical algo move. And ran it lower and lean into it in a major way. Ran it all the way down to the 65s. Close at 68, but I mean close enough to that support area at the 65s. And then slow grind back right back up again. So I totally missed the whole thing. I was looking at some other stuff. I paid attention a bit later on the Nasdaq, but I mean I was looking at I totally missed this rundown, and that's because they slop in the middle, and then suddenly they just kind of lean into it like that. Takes you by surprise, and if you're not paying attention, remember what I said. If you're fading these edges aggressively, and just trading this as a range bound market, this is the one which gets you caught, unless you have a stop and you don't mess with the stop, and they let it just stop you out if you're wrong on it. If you try to repair this trade, you would have been in some serious problem, serious trouble. So anyway, I'm thinking that we are going to be right, we are right back here to value again, and right to the mean. And let's see if they can keep it going. Or against the mean, usually it's a pretty good short setting up, but I would just give it a little bit of time and see if they're going to run it higher or not. Sometimes when it gets to this kind of a grind, they're going to run it all the way up to this upper edge, and it's not going to be any relief at all on the way up there. So just watch for that. They could be shorts against that the 93 here at the midpoint at the mode. You just don't know which one is going to hold, if any of them holds. So we'll see what the market is up to here. But sometimes when you start getting this kind of retracement, you definitely want to be cautious stepping in front of it. If you tried a short trade earlier on and it didn't work, you know, and you just kind of stay out of it and just kind of watch it. Hopping on a long trade, it's buying in the highs is not necessarily recommended either. If you think you want to be on a long trajectory to the upside, wait for some sort of a pullback. It's going to look like it's falling out, pulling back pretty hard, and then that would be your opportunity. But at this point, just kind of watching it. So ES range bound. At this point, the bias. I'm going to keep the bias to the upside, given the fact that the retracing it so hard from this rundown. Absolutely no follow through, just a big huge scare, shaking out a lot of weak positions, and that's kind of what they did. Now, news for tomorrow is employment situation. So at 8:30 tomorrow, we get employment situation, and that's going to be setting the tone for the day. We have two Fed speakers throughout the day. At 10 o'clock, we also get consumer sentiment and wholesale inventories. But at 8:30, it's going to be busy tomorrow. We'll see what happens then. So here you have it. They pulled back from the mean. Let's see if it becomes bigger than this. It's just a little baby pullback yet. So if you're in that trade and you want to be at break even by now, get shaken out, just don't worry about it. So Nasdaq and the bond market is just range bound. It's just holding in the range right now. They've been back and forth, but you see all the rally from the London close, a nice little move up into 2 o'clock and then right back down again. So nice accumulation going on there, but still flat out range bound trading on the bonds. They are to the upside though, so I would start range bound going into the overnight. They're trading around this high volume area at the 116.08. On the Nasdaq, I did take a trade on the Nasdaq, and I was at this pull. I totally missed the pullback, as I said. And then on this flop here, now either you get continuation, and that would be your inclination. I've seen this a few times before, and I would wait for the second leg lower before I did a continuation trade. So this one here, when you start heading, if you try to get short on it as it moves lower, you'll find yourself just getting caught. So you have to give it some room and let it develop. And once you see this happening, now you have a shot, and now you can start thinking about, yeah, maybe they're going to actually try to retrace this. This is a fake out. They're going to try to retrace it. There's no follow through in the downside. So I got long when this pullback happened. This looked very much like going to try to run this really hard to the downside again. And see if you were short up at this 750s, at least you went to break even for a short period of time. I was looking for the buying opportunity. See, I kind of bought it aggressively right here when it started hitting that initial balance low. And I ended up getting shaken out of that trade just a little bit later. So that was about it. And then they took off, obviously. So I didn't work out. I didn't re-engage it again. So but that would have been a beautiful trade, right? Look at that. So but a good trade location. I moved my stop a little bit, and that was a mistake, and that's kind of knocked me out, and that was about it. But it was a pretty good move, pretty good setup. And it's the trade-off in this kind of a trade is always, are you looking for continuation to the downside, which is your initial reaction, right? But so you wait for these bars to form, and you wait for the fake out if it's going to be one. Now, if this one starts heading lower right from the get-go, and you start seeing the pressure, now you know that something is going on, or some pressure is to the downside. But if it just does what it does now, that starts heading lower, reverses, goes back and forth, then you know that that momentum is broken, and that the initial rundown is just that, a huge shakeout. So that gives you an opportunity. Then you look for the buying opportunity for a retracement, and you kind of want to sit in it though. But at this point, look for a potential run up all the way up here to that second standard deviation, maybe even the initial balance high. We'll see. They're right up here against resistance. So at this point, we had to be a little bit cautious about just buying the high, because you're getting into you went into the mode, the mean, the midpoint, the tablet, all those things here had to be taken out for this to start clearing the path to head higher. So we'll see where they're going to go. But at this point, getting long against the pullback into the mean and to the mode, that would probably be a pretty good buying opportunity, I would think. All right. Finally, looking at oil and gold. So gold, that's kind of holding where we left it. They are they're slowly grinding above these areas of resistance. So they're above the 78 now. So I would start from the long side on gold again. Looks like they had a pretty good shakeout going on gold as well. Shook out some weak positions and are heading back up again. So I would start from the long side looking to buy against the 78s and the 71s again. If they trade below 71s, go back on the short side, look for rotation back to the 50s. So that's called. Not going to be super aggressive on the short side. We may have a short here against the 87. It's going to be an edge up here. Going to be one edge up here at the 93s as well. So I would look for short setups against these edges, but but that's about it. You start taking those out, I'm going to stay on the long side. And then oil, well, slowly grinding to the downside. They took out the support. They were down here at the 60s for a while. They finally grinded a little bit lower, but they are to the downside, and I would start looking to sell strength all the way up to that 71.80. So looking for shorts against the 75, 70, 75 against the 71s and against that 71, 75s for rotations back down. Probably adjusting this edge going into for tomorrow, but above the 71, 75 to 80 here, this upper area, I would take off the short bias and go back range bound. So that's it right now. I got only 2 trades on the Nasdaq, just $7 to show for it. That was a shakeout on that last one. That it could have been a beautiful trade, but you had to kind of stick with it, and had to be prepared to be prepared and pay attention to what the market is doing. But this move here right now, unless the ES fails to take out on the Nasdaq. So back to the ES now. If the ES fails to take out the mean, that could set up a nice short for a move to the downside again. I think, however, we're going to see a move up to that mode at the 6100s, 98 to this mode right there, at least to that spot. Maybe not in a straight shot, but I think that's where we're going. So we'll see how this whole thing develops. But we're back up in this range again. So let's see if they can make it a little final go at it. So now after the close, we get, I think, Amazon earnings. So there could be a little bit of volatility there. But the next step is going to be tomorrow morning, employment situation, the Friday the 7th. So thank God it's Friday. All righty, guys. See you in the morning. You have a good evening.